and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus is going to be on Birlasoft's Q1 numbers. The company's reported a US dollar revenue of $159.1 million, which is a drop of 2.9%. We've also seen the constant currency terms, the decline of 2.7% on a sequential basis for the company. The EBIT for the quarter has slipped by about 13% sequentially to 174.5 crore rupees. The margins have narrowed by 140 basis points to 13.2% as well. So, and even though when you look at the profitability figure, that's in fact grown on a year-on-year basis to 9.2% as well. So, sequentially, there's been some drop, while year-on-year still the momentum is sustained. Let's get in a word from the top management to help us understand what went good for the quarter and what could improve going forward from here. Mr. Angan Guha is now with us, the MD and the CEO of Birlasoft. Warm welcome to you, sir, and thank you so much for taking the time out for this conversation with us. To start by telling us that, of course, the beginning to FY25 has been slightly softer for you, especially when we talk about the top line that has seen a drop right there. Could you tell us the key reasons behind the same? Is it still the tough market conditions that has led to this drop? And do you actually see things improving from here on?
So, Sakshi, thank you for having me on your show. So you're correct. Our first quarter has not been a great quarter. I mean, particularly we ourselves are not very proud of the way we delivered 1Q. But we must also appreciate that this comes on back of almost 6 quarters of sequential and year-on-year growth. Even in Q1, though sequentially we've dropped both revenues and margins, from a year-on-year basis, we've actually increased again the revenues and the margins. So both revenue and margins have gone up year-on-year. So to that effect, it's been a reasonably okay quarter, though I think quarter-on-quarter we've disappointed. Now, let me come to the reasons in terms of why that happened. So we'd won some programs in the last quarter, that is the fourth quarter of last financial year, which was supposed to start in this quarter. Now, we had the people ready, but our customers essentially pushed out the start date by about 3 or 4 months, which impacted the quarter. So to your other question, will Q2 look better? We strongly believe that Q2 will be better than Q1. Look, we are already on the 1st of August, and some of the work that had not started in the last quarter are already starting now. So to my mind, Q2 will be better than Q1.
Q2 will be better than Q1, so that's a positive outlook that you're looking at. Would you also be able to stick to your earlier guidance of where you said that you would be probably posting industry-leading growth in FY25? Is that on track?
So hard to say at this point in time because of two reasons. One is, of course, our quarter one was not very good, as you yourself have noted. But equally, the market is also a little volatile. And with the elections coming in the US, we'll have to wait and watch in terms of how the spend patterns of our clients shape up. As you know, 86% of our revenues come in from the US, so that's a large market. So we'll have to wait and watch. Our job will be to execute quarter two. I think if we can deliver a reasonably good quarter two, then we'll be back on track. Now, for the year, what our growth will be is hard to say at this point in time. But all I can tell you, Sakshi, is we'll be continuing to invest in our business, in our people, in our clients. We are here to build a long-term business. I understand some quarters will be good, some quarters will be bad. But overall, we'll be focused on building a long-term, sustainable, growth-oriented business.
All right. So since you talked about the US market, which is a key market for you, I just wanted to get a sense on the demand on the ground as far as US markets are concerned. You did say that there could be some overhang of the US elections, which will be in the latter part of the year, calendar year. Now, but the indication from the US Fed on the interest rate hikes now certainly on the table since September onwards. Do you think is that going to at least loosen up some of the purse strings of your clients? Would the spending be a little bit more? What is your own anticipation right there?
So my sense is, when the Fed increases rates, like you said, obviously there will be a little bit more spending that will come up, but we'll have to wait and watch in terms of how that goes. We can't certainly say, how that will play out. But the demand environment, Sakshi, is pretty stable. Nothing has changed over the last maybe 4 quarters. So look, we are cautiously optimistic. At least the clients we serve are strong. and we will participate in their transformation journey, which we always have been. We are also building up our infrastructure business, which has seen tremendous growth over not only the last year, but last quarter. So, look, there are green shoots in our business, and we will be focused on not only growing some of the newer business lines that we are creating, but also growing the other strong business lines that we have.
Okay. Also, Mr. Guha, I also wanted to understand as far as your clients are concerned, we have actually reported that the top 5 clients are now contributing greater, about 36.2% of the overall top line. Whereas on the other side, we've actually seen a reduction in the client base overall. You know, you've lost one client during the quarter, you brought down the number of active clients to 258, and this is a continued trend of client losses over the past 7 quarters per se. How are you assessing the situation? As far as your client base is concerned, would you be comfortable with a shrinking base as of now, and the top 5 clients continuing to contributing greater? Is that the mind space that you have?
Yeah, Sakshi, we've laid out a strategy of client mining. We want to do more with lesser number of clients. I mean, when I joined the firm about 2 years ago, we probably had about, if I remember right, about 380 or 400 clients. So, systematically, we've reduced our tail. We want to work with fewer clients, but build deep relationships with the clients that we have. So that is working out well now. I'm not very sure whether 250 is the right number or 260 is the right number. Hard for us to comment on that. But as we start seeing industry leading growth going forward, I would suspect that a number around the current number will be the right number to go after. You've also said that our top clients have the contribution from the top clients are growing. And year on year, all our top 5, top 10, and top 20 clients have grown above the company average, which I think is a positive.
Okay, got that. And now help us understand a bit more on the deal win side as well, sir. For the quarter, it totaled at around 160 million US dollars. Your new deal wins came in at around 94 million US dollars, representing a 5-quarter low. Is that somewhat a kind of a disappointment, and what could the deal pipeline really look like going forward from here?
Yeah, so well, it is a disappointment to the fact that quarter on quarter deal signings have slowed down. But again, year on year, our deal signings have shown growth. So last year, same quarter, we delivered about 145 million worth of TCV deal wins. To that effect, this quarter it is 160. So technically, it's about a 10% growth year on year. Our pipeline is stronger. I don't know how Q2, Q3, and Q4 will shape up from a signing perspective, but pipeline is growing. Hopefully, if we can convert more deals, that'll only help us. The only thing that I can tell you is last full year, we delivered $875 million worth of deals. Our endeavor this year will be to better that. Now, how much more can we do? Hard to say, but we would like to deliver year-on-year growth on our deal signings as well.
Okay. Overall, towards the end of our conversation, so I want an understanding. You did say that you're confident of a better Q2 rather than a Q1. So quarter on quarter, we are probably looking at a better quarter ahead. For the entire fiscal year, FY25, when you compare with FY24, do you at least see the top key metrics showing an improvement, a growth over last year as well?
I think so. I think so. I mean, progressively as we go quarter after quarter, I think we will see improvement in the key metrics. But I can't really commit for the year how much growth we will deliver, only because the first quarter was soft. But Q2 onwards, we will start seeing growth back. For the full year, we will see. It's a little hard to commit at this point in time. Currently, we want to make sure that we deliver Q2.
All right. Well, thank you so much, Mr. Guha, for being with us on this show and helping us understand the key insights from the quarterly earnings and the outlook going forward. I wish you all the very best. And thank you so much for speaking to us on Business Today Television. Always a pleasure to host you, sir.
Thank you.
Thank you so much. And viewers, with that, we wrap up this special conversation with Birlasoft on the Q1 numbers. Softer Q1, the management themselves are disappointed with the kind of delivery that they've done, but they're confident of a better Q2 going forward from here, things improving, green shoots being seen at this point in time, and they are going to be continuing to invest in the business going forward from here is what is the key highlight from this interaction. We'll continue to get you such interesting, insightful conversations from the top managements of the companies that are reporting their numbers on the street. So stay tuned. There's a lot more lined up for you on Business Today Television.
We are at Churalmala where the rescue operation is underway. You can see this was a connecting bridge, but due to heavy rain and heavy flow of water,